ATS presents The Realty Debate, powered by Tata Capital, with Manisha Natarajan.
A very happy Deepavali to all of you. Well, it's an auspicious day which brings good fortune and prosperity. So we are going to focus on just one thing. How can you make money off real estate? Well, we do know, yes we know, that the property markets across India have slowed down and have been, well, to put it mildly, down in the dumps. In some markets, there is even distress. But we urge you to remember just a couple of things. It wasn't that too long ago that several, in fact, most drawing room conversations were about real estate and how much money so-and-so friend or relative has made, or one boasted about how much money you had made in buying great property. Number two, check out the wisdom of any big investment guru, and they all have one smart advice. A distress is the best time to hunt out for good deals and make money if you've got the acumen and the patience. So on this Diwali special, that's what we are going to focus on. We have 50% of India's household savings going into real estate. How do you make the most of it? I'm joined by Sanjay Dutt, Executive Managing Director, South Asia, Cushman & Wakefield, India. Ruby Arya, Executive Vice Chairperson, Milestone Capital Advisors. Anurag Jhawar, Business Head Consulting Research and Data Labs, PropTiger.com. Gaurav Rakyan, Managing Director, Rising Straits Capital. Nishant Singhal, Promoter and Director, Strategy Investors Clinic. And Arun Agarwal, Vice President, Institutional Research, Religare Capital Markets. Finally, Sameer Jasuja, Founder and MD of Prop Equity. Ladies and gentlemen, well, we will not focus on negatives today, or at least we shall try and keep away from them as much as possible. And I would like all of you to tell us, how do we make money on real estate? Because, you know, as an asset class in a diversified portfolio, Sanjay, you will agree that real estate has to be there, doesn't it?
Manisha, real estate is a big segment of our lives and investment portfolio. It continues to be. I've seen some of the most reputed institutional investors making most of the market, whether it's Blackstone and Canadian Pension Fund, or many others who have come in. And there is a merit behind it. They see an opportunity in a market like, in real estate in India. And yes, one may have a different perspective from residential market point of view and from retail investors' point of view, but there is a story. There is a medium and long-term story that this country holds, and that will continue to be the case for next 10 to 15 years. And if the markets have come down, please make the most of it and buy. And if you're an end user, you certainly need to buy. And if you're an investor, then you need to take certain precautions. You need to do some due diligence and market research before you do that, because upside probably may not be in every property and every investment. More informed decision will help you make the right choice.
All right, Nishant Singhal, come in here and tell me, first of all, why have Indians loved real estate so much? I mean, if I look at just the sheer numbers, you see that stock markets have given you probably over a long historical period higher numbers or higher returns in real estate, yet people feel so much more comfortable holding a property.
The reason is very simple. A normal buyer understands real estate much better than equities or mutual funds, bonds, etc.
Does he? Are you sure about that?
Normal buyer understand. That's why still real estate continues to be one of the largest asset class in anybody's portfolio, because in real estate, if you go and visit a site, for example, you can understand that area, you can understand the risk around it. If you belong to a particular state, you understand that state, what are the demand drivers, supply drivers, etc. But in equities, the risks are much bigger. I mean, tomorrow, overnight when you're sleeping, something happens in US, and morning you will see equities coming down by 5 to 7%. So it's number one, it is very easy to understand. Second, it is a real asset. So while normal buyers have made a lot of money in equities also, but then when they come down, your wealth comes down by 50-60% in a week, which generally the retail buyers are caught on the wrong side of the markets, which we have seen in 2007, 2010, 2012, and now, for example, whatever correction we saw today. So people still feel that real estate is easy to understand. It's a safe investment. The downside is limited. Today we are discussing prices have come down, there are unsold inventories, etc., etc. But people who bought properties like 5 years back at 2,000 rupees per square feet in Noida, or maybe 3,500 rupees per square feet in Gurgaon, are still sitting at handsome gains.
Okay.
So, yeah, so
easy to understand. Ruby Arya, would you agree that real estate is easy to understand? I mean, you can go look at the site, look at the location, find out how far you are from connectivity or the closest transport system, schools, hospitals, all of that. And it doesn't take rocket science to buy right.
No, I think real estate is one of the easiest assets to understand. I think everyone, I mean, as you said, conversations revolve around real estate whenever you get to meet people. And why I say so is because real estate provides opportunities for all class of investors. And as Sanjay said, I think sometimes negative sentiments are not the worst times to buy. Actually, I personally feel they are one of the best times to buy. So if you look at what is available in the market right now, if you are a retail investor, you can sort of get into mid-market residential housing, of course, in areas which have a lot of social infrastructure and are employment-driven. If you have, say, a surplus of 1.5 crores, investable surplus, you could look at a diversified portfolio of risk-adjusted returns by partnering with a debt or mezzanine platform with pretty much low fee structure and skin in the game. And if you have investable surplus of 15 to 20 crores, then I think you have multiple choices. You could probably go in for pre-leased commercial, and I must say that one of the things is that a lot of equity money will now start into moving into pre-leased commercial. We've already started seeing it, and that is one of the best buys right now. It is, you can get in at low capital values, earn a stable yield, and for the yield return, a lot of HNIs are preferring that.
Okay,
On the other side, you could also get into...
We'll come back to what are your top picks right now. It's just that let's start with an overview of what's really going on. Samir, I mean, you wanted to make a point there.
A bit over here.
I
think real estate was a very easy asset class to understand.
Okay.
Not anymore today.
Why?
Earlier there was a demand-supply mismatch with more demand and less supply. Today the tables have turned, that there is exceptional amount of supply and very less demand. That's the main reason. The second biggest reason today is that if you look at the pricing 5 years ago was really affordable across cities. Today the pricing over the last 5 years has run up so much that affordability has really come down compared to what it was from an end user perspective. And end users also drive real estate markets, and that is what has been witnessed, that end user driven markets have done better than investor driven markets because they've just come down. Having said that, I'm not saying real estate continues to be a great asset class, and the biggest reason being there's an underlying asset and there is a rental opportunity that you get from an end user perspective, that he can put his apartment on rent and get a rental yield month on month, and he always has an asset to sell. And that way real estate is a better asset class to invest into. But as far as the understanding of real estate is concerned, is now getting more and more complicated, and I could say as complicated as equities would be in today's market context.
All right, Gaurav.
I don't agree.
Okay.
Even today, say till 2 years back, nobody knew unsold inventory, stock of 48 months, 60 months. Okay, and
By the way, you Nishant better give us credit for making that a popular term. What is unsold inventory?
So newspapers,
literally, I think Samir and the real estate show, property show at NDTV has made everyone aware of what unsold inventory is.
So newspapers have been writing about unsold inventories, etc., for last 2 years. All channels are talking about it. But if you ask a normal buyer today that in New Gurgaon, what is the unsold inventory level, nobody knows. What people go and see is, if I am going and seeing a project, are some factories come around it? Are some job opportunities getting generated around it? Is some highway or an expressway getting constructed? So I don't agree that people today understand what is demand supply. A buyer who buys a apartment or a plot doesn't care about what is the demand supply situation.
Okay,
however,
let's get that debate on. Gaurav Rakyan, let's bring him in as well. He has a point to make. Gaurav, would you agree that nobody, I mean, even investors really don't look at the numbers? We may want to believe that they take very informed, scientifically culled out, data-backed decisions, but the fact of the matter is they're pretty much led by A, the location, and secondly, the sentiment of what's going on. 5 brokers telling him it's a fantastic buy, and somebody's just made 20% returns in just 6 months, been able to flip it. That's what drives it.
No, I think, yes, real estate was simple, but people didn't know what was reason, what was the reason for the, let's say, the abnormal price increases, that the sector has witnessed. So while, so clearly you don't buy residential real estate for yield. India has probably one of the lowest residential yields in the world. Okay, yes, you are buying residential for appreciation, and the appreciation kept happening, but nobody knew why the appreciation is happening. I mean, the unsold inventory levels were still pretty bad, let's say even 3 years back. But yes, it was investor sentiment. So I think, real estate was easy because people believed that, you can keep investing and the prices will keep growing. I think right now is the market. Investors and end users have realized, rightly so, that this is a sector where you need to do much more diligence, before making the making the investment decision. You study the market, you look at unsold inventory levels, you look at, at the end of the day, what will drive growth here. And then, you can probably also now take comfort from the fact that if there are institutional investors who have backed some projects, retail investors can take cues from that also. Okay. So a project which has strong financial partners, strong construction partners, good contractors, good PMC, these are cues that a retail investor should look at before making a real estate investment decision.
All right. Anurag Jhawar, where do you stand on this discussion that real estate is either an easy asset or an easy asset class to understand or not?
So, to my mind, real estate is something which is essential asset. It's needy. It's easier said to acquire. There are a lot of complexities involved which someone needs to kind of master. While for an end user, I would say that essentially if he's taking care of the legal risk and he's kind of aware about the construction schedule and track record of the developer, he should be okay. But from an investor perspective, this is becoming more and more, I would say, there are a lot of loose airs in the, loose balls in the air, where someone has to kind of understand at what price point someone has to enter and what price point someone has to exit. Because of the demand-supply situation, as Samir rightly mentioned, it's more of from a demand, from a time when the demand was high. Today we are at a situation where supply is high. So it's easy said, but I think there's a lot of steps required to kind of understand it better.
Okay, so let's come back to a couple of things that we are going to discuss. Best markets. What are some of the picks in micro markets across India's top 8 cities, ladies and gentlemen, that you would think is good from an end user? The fact of the matter remains, Sanjay, and I'm going to come to you now, that even if I'm an end user, real estate being the heaviest or taking away the largest chunk of my savings, it is a backup. It is literally a retirement plan. I have seen so many retired or people who have retired actually selling off their asset which they've held, pocketing the money and moving either to a smaller location, and that actually becomes a big retirement fund. So that capital appreciation requirement or need remains, whether it's an end user or an investor, doesn't it? So how do you pick the right micro markets today?
I think if you look at the demand very carefully and you look at the economy of this country, there are certain sectors which are really driving the demand. You spoke about the top 8 cities. In these 8 cities, IT and ITES is one of the biggest demand driver. They were banking and financial services, pharmaceutical, telecom, e-commerce, and few other sectors which are also driving demand. But when you look at the real common thread across all these sectors, with the exception of banking, more specifically to investment banking in Mumbai, which has a very high price point affordability, majority of the sectors are basically providing employment to people who are in the mid segment and lower mid segment. And from that point of view, if you're a retail investor, you would invest in mid segment or affordable segment, which basically means in the popular suburbs and the suburban outer periphery, where the affordability is a key factor and delivery is good, and therefore volumes are high. So I think that is the segment to invest in.
Anurag, you want to take a go at some of the best performing markets you think from an investor's point of view?
Right, Manisha, so distress is a very good time to kind of take a bet. And to my mind, there are few ingredients which are very important for any market to be kind of picked up. So one is obviously the livability score has to be good, and second is the overall inventory overhang has to be in a reasonable level. And the third is obviously there should be liquidity in terms of demand and supply. So we at Data Labs, we pick couple of markets across cities. So I will just throw some names around. So in Bangalore, Tanisandra and Hennur, these are markets which we feel that will do well going forward. In Chennai, Tambram and Manambakkam, which is the ECR link road, should do well. Similarly, in Pune, I think Hinjewadi, taking cue from Sanjay, IT-enabled demand, prices haven't increased too much over the last 2.5 years, should do well. Similarly, if you look at city of Ahmedabad, I guess it's largely an affordable market itself, but within that, South Bhopal and the Vaishno Devi Circle on SG Highway, these should do well. Then you talk about Kolkata, I guess Rajarhat, they haven't seen too much of pickup, should do well going forward. So if you look at all of these pockets, there are three important things. Livability index is high, more than 70, I guess, out of 100. Your inventory overhang would be probably less than 24 months. And the prices haven't increased too much. So I guess these are the areas which someone can look at.
All right, okay, so you've given a long list, but I can see that either Anurag is just leaving the northern cities out for the Delhi panel here. So anybody in Delhi wants to take a call on which are going to be some of the best markets, Gaurav?
So I think, on a very generic basis, if you look at the track record of real estate, if one were to invest in, let's say, a project which is nearing completion or is completed, I would say, you can go for any market and, it's a pretty good time to buy. However, if you want to take execution risk and you want to buy at an early stage, I think, the markets where developers are in a healthier position, or where, let's say, the average delay in completion of projects is lowest, which is, let's say, markets like Bangalore and Pune, those would be the markets to buy. Whereas, let's say, NCR and Mumbai, would be slightly high risk markets because, let's say, the health of developers is not as good as it is, that of the South developers. And the track record as far as, completion of projects has not been very good.
Okay. All right, those are some really good tips. Either buy nearing completion and negotiate a good deal there. If you're getting into early stage, healthier position, developers would be better. In that case, Bangalore and Pune are way better than NCR and Mumbai. Nishant, he's quietly waiting. I'm wondering what's brewing in Nishant's mind.
No, I completely agree with Gaurav, and my advice is primarily for the end users. Go for projects. So one sector in real estate where the demand is more than supply is ready to move in units. So go for units which are either ready to move in or are coming up for possession within next 6 to 9 months. Don't go for 18 months, 24 months, etc. Ready to move in or within 6 to 9 months. Look for areas where some good infrastructure is about to get operational in next 12 months. So there are various projects which have got significantly delayed, like Dwarka Expressway, KMP, etc. But there is a possibility that they are coming up in next 12 months or so. For example, today there was news about Golf Course Extension Road that will be ready in another 6 months. So ready to move in, closer to possession, something which is close to a big infrastructure development area. Those are the areas where buyers should look at, and especially in ready to move in, I think the price correction is much more than the units which are under construction. Discounts are more than at least 10% higher in case of ready to move in units, because developers have already invested in land and construction and they want to get out of that inventory faster than the inventory which is under construction. So go for ready to move in. Another advantage for ready to move in or something which is coming up for possession is that you can rent it out at 2 to 3% yield, which will immediately bring down your interest, net interest cost to about 6%. If you assume mortgage cost at 9.5% or 10%. So just go for ready to move in. You keep yourself away from execution risk.
Just to add to, the point that Nishant made, and, while customers now start analyzing data more and more before making a buying decision, one of the things that's not really analyzed very deeply is people talk about the absolute numbers of unsold inventory. It's very important to dissect the unsold inventory based on completion status.
Yeah.
So when you look at the unsold inventory of under construction projects, let's say, to Nishan's point, projects which are more than a year away, yes, the unsold inventory levels are very high. But it's equally important to look at the unsold inventory of completed units. And what you'll observe is that even in markets like NCR and Mumbai, the percentage of completed units which are lying unsold is still low.
All right, Sameer, sum it all up. I mean, so spot out the markets, you've got the data, put it all together. What are the markets to buy into? And what kind of projects should one buy into?
So, I would like to add to what Gaurav said, that, there is what Gaurav said was partially right, but then you also have a lot of investor-driven properties that have got purchased, which are coming back into the market, and there is no way to capture that inventory. So that inventory number can also be very high. And that's exactly what is happening in markets like Noida and Dwarka Expressway, where all the inventory that was sold out much earlier to investors has come back into the market. So it is a science, and it's very complicated that way. Even ready to move in, because projects are now getting ready. But one point that nobody's even spoken about is Hyderabad. That market is doing exceedingly well today. The gap between tier 1 cities and Hyderabad with respect to prime properties, say in Gachibowli and High-Tech City, I would say they're still 40% cheaper, equivalent properties in Bangalore or Pune. So that is one micro market that I would easily go blindly and see a big upside coming there.
Okay, so that was one of the hidden gems. We'll come back and get more of our experts to comment on some of the hidden gem markets that one could look at. Stay with us. There are many ways to turn a profit with real estate, and that's what we are focusing on this Diwali special.